Well, SoFi finally did it. On January 18th, the OCC announced it had conditionally approved the SoFi bank charter, freeing up SoFi to become a national bank. Now, the stock price has had a nice little bump of around 12% in the days following the announcement, but to be totally honest, I wouldn't count on that bump sticking around in the short term, which is fine because the long-term benefits of this bank charter are even greater than a lot of bulls of the stock realize. So in this video, I'm going to walk through what effects the bank charter will have on SoFi long term, looking at its impact across SoFi's three business segments of financial services, technology platform, and lending, and how over the next few years, this bank charter announcement could as much as 4x SoFi's stock price, which might just keep pace with the rate that Chipotle keeps rising their prices. I mean, come on, a 13% price increase last year? I'm gonna have to start cutting back. So hit the like button if you want, and let's start by looking at SoFi's business segment of financial services. Financial services for SoFi includes everything you're gonna see with their SoFi app, which I'll link to in the description. There's SoFi Invest for investing with them, SoFi Relay for tracking your expenses, and their credit card. This portion of SoFi's business competes directly with larger competitors such as Robinhood or Cash App. And up until now, they have lagged behind these larger first movers in terms of their number of users, with SoFi having 2.9 million app users, or members as they call them, while Cash App has 40 million monthly active users, and Robinhood had 22.5 million users a year ago. And I explained in a previous video why the number of users is one of the best ways to value this business segment. But while these competitors may have more users than SoFi, SoFi's bank charter may give them the edge they need to outcompete the big guys. In fact, in 2019, Robinhood tried and failed to get a bank charter, ultimately pulling their application. Now, I don't know if this is a reflection on their leadership team or some other issue with the deal, but it reflects well on SoFi that they've managed to beat Robinhood in this arena. Now, Square, the owner of Cash App, does have an arm of the company with a bank charter, but they are also a much larger company at a $60 billion market cap. So I don't think too many SoFi investors would complain if SoFi ends up looking like Square in a few years. But let's talk about why a bank charter would help the financial services segment become way more valuable and competitive with other companies. Well, right now, in order to offer banking services, SoFi has to partner with another bank. On their website from 2 years ago, they had a list of 6 banks that they distributed money to for their SoFi Money Sweep program. And while partnering with another bank is a good strategy to get up and running quickly, there are some major costs associated with using a partner bank. We can see an example of this in Lending Club, another fintech company that actually obtained a bank charter back in February 2021. After becoming their own bank, Lending Club saw a 90% reduction in their cost of deposits. So if SoFi can cut costs that dramatically with some of their financial services products, they can hugely increase their margins in this business, or more likely in SoFi's case, pass those savings on to their users to give them the best possible user experience. And SoFi CEO Anthony Noto talked about this on a call with Jim Cramer from Mad Money.
SoFi Money will go from an account that we partner with a bank on to our own SoFi checking and savings account. So we'll be able to give a high interest rate on checking, higher than anyone else gives. We'll be able to do that with no fees. We'll be able to provide overdraft protection, the ability to pay with your phone, pay with your card, pay your friends person to person.
With him also noting that they will be able to lower their costs around 50% on their checking accounts and then pass those savings on to the consumer. The other big benefit for financial services will be in advertising. Financial services act almost like a top of sales funnel for the whole company, capturing new users and upselling them over time onto more valuable products like lending. In fact, SoFi's members tend to be twice as valuable, bringing in $1,600 in lifetime value per person if they start as a financial services member before later moving to lending. This means grabbing new customers for SoFi Invest, SoFi Money, the SoFi credit card is super important to growing the business as a whole. And as with all financial services companies, trust is a big part of that. Just like I wouldn't trust putting my money into weird crypto NFTs like this one that literally sells poop emojis. Maybe we are living in a simulation. But we've seen SoFi investing in ventures to build user confidence. Their SoFi Stadium is hosting the Super Bowl this year, which will probably see around 100 million views. They were also the set for one of Mr. Beast's videos, which also saw around 100 million views. And with the bank charter, that adds another layer of legitimacy to what was once a fintech startup, but is now becoming a real player in the finance space. But financial services isn't even the business segment that will see the most benefit from the bank charter. The next business segment is technology platform, which in reality mainly refers to SoFi's Galileo platform. Galileo used to operate as an independent independent company that actually predates SoFi until SoFi acquired them in 2020 for a staggering $1.2 billion. But it turns out to be money well spent, with Galileo enabling everything from payments processing online to clearing card transactions to providing APIs that enable online payments. Today there are 79 million Galileo accounts, giving you a glimpse of the sheer scale of this segment's base. But up until now, Galileo has been held back by improvements that they've been making to their platform, with their shift from running their own servers and into the cloud only just starting to finish up this past quarter. This means that once they are in the cloud, they can basically scale to as many users as they want, and it means they can offer new services much more easily. Imagine if SoFi could offer a credit card through Galileo, and SoFi could act as their own sponsor bank, completely cutting out the middleman that companies such as Apple have had to deal with when they launched a credit card. Or if Galileo could enable instant payments transfers within the SoFi ecosystem without needing to pay any outside fees, basically bringing finance from the 3 to 5 business days world of the 1970s and into the 21st century. I made a whole video outlining the strategic impact of Galileo, which you should check out if you're interested, but in terms of the 5 to 10-year plan for SoFi, this might be their most important area. But what about a little more medium term? What business segment holds the potential to 4x SoFi's stock market cap over the coming quarters as the bank charter starts to affect their business? Well, that would be SoFi's lending business, the bread and butter of the company and their original business that they launched way back at Stanford Business School in 2011. Lending is responsible for the majority of SoFi's revenue, even though it has far fewer members than their app or Galileo. SoFi offers all kinds of loans, mortgages, personal loans, student loans, but their goal is to target millennials and Gen Z, people who are not yet wealthy but will build their wealth over time, and they'll do it with SoFi. We already talked about how trust will be super important for this company, which the bank charter will help with, but there are also hard numbers around why the bank charter will benefit lending specifically. I mentioned Lending Club earlier, another fintech company that, similar to SoFi, offers a lot of loans, and they obtained a bank charter in February 2021. Lending Club saw a 90% reduction in their cost of deposits, and their CEO noted during a call with CNBC that they are driving around 30% more revenue on the same loan volume. And this helped the company report incredible results a few quarters ago, boosting the stock price around 50% basically overnight. So it's not unreasonable that SoFi could see similar benefits from their bank charter. Now, it did take Lending Club around 2 quarters from the time they were approved to when the effect actually became visible on their business, but ultimately they saw a price rise of over 300%, or over a 4 times return between February and November of 2021. So SoFi will also likely see a delay between now and when we actually start to see the bank charter affect their business. It probably won't do anything in their next earnings announcement, which is taking place in a few weeks, maybe not even in 3 months after that, but by this fall, I would expect to see substantial improvements in SoFi's business coming directly from the impact of their bank charter. So if I were a betting man, which I guess I kind of am, I would expect any short-term moves in the stock price to be temporary, and I'm really looking forward to their Q2 2022 or maybe Q3 2022 earnings for the real impact. The last impact I think we're going to see from this bank charter announcement is a sort of clearing of the pipeline for what's next, and a lot of it could be even bigger than the bank charter. And one big move will be SoFi potentially expanding outside the US. Now, SoFi originally announced in April of 2021 that they were expanding outside the US for the first time by launching SoFi Invest in Hong Kong. And while it's not clear how much market share they've managed to grab in that region, they say they are the only comprehensive investing platform that offers access to brokerage, automated investing, and ETFs in Hong Kong. So it could be a significant amount. And this expansion again helped them to beat the behemoth Robinhood in becoming the first mover in the space, while Robinhood's own attempt to expand to the UK in 2020 failed. We've also seen success from Galileo platform in Mexico, and 2 quarters ago, the CEO talked about pursuing even more expansion into the Latin American market. And if all that isn't enough, based on this registration for a company in Singapore for SoFi Singapore PTE, which they describe as a stock, share, and bond brokers and dealers, it sounds an awful lot like SoFi might be putting out some feelers there as well. So in the same way Robinhood came to dominate the US market by being an early mover, SoFi may have an opportunity here to compete internationally before too many other companies get into the mix, even though China does have some presence in Singapore already. But honestly, given SoFi's history of executing a lot more effectively than someone like Robinhood, that first mover advantage could be enormous for the company. But let me know what you think about SoFi finally getting a bank charter. Also, don't forget to grab your $5 from SoFi when you sign up for their app. Let's get those user numbers up. Don't forget to like and subscribe, and I'll see you next time.